Gold's price moved in a sideways fashion over the past few days, yet seems to be hitting a ceiling at the $2,355 per ounce. Today we're to discuss the fundamental challenges laid ahead for the precious metal, as well as upcoming financial releases that may affect the direction of its price action. Finally, we will be concluding this report with a technical analysis of gold's daily chart. Gold's price tended to maintain its negative correlation with the dollar over the past few days, with the greenback being in the lead. It's characteristic that especially since yesterday, the weakening of dollar seems to be benefiting gold's price. Yet we have to note that in the past week, the relative inactivity of the greenback tended to muddy the waters somewhat for the markets. We expect in the coming week the negative correlation of gold with the dollar to be maintained and become more clear, possibly supported also by increased volatility. Hence, should the dollar be on the rise, we may see gold's price slipping and vice versa. The release of the US ISM manufacturing PMI figure for May tended to highlight the importance of US financial data releases for the price of gold. Yet the market interest is expected to turn towards the release of various US employment data this week, with the list including April's JOLTS job opening today, on Wednesday ADP national employment figure for May, on Thursday the weekly initial jobless claims figure, and the crown being on Friday the release of May's US employment report with its NFP figure. Should the data and especially May's US employment report reflect a tight US employment market, we may see the dollar getting some support and consequently weighing on gold's price and vice versa. We have to bear in mind that a tight US employment market could allow the Fed to maintain rates high for longer, thus allowing the release to generate substantial interest beyond the FX market per se. We note the report stating that central banks seems to be picking up in buying gold over the past few months. Geopolitical and macroeconomic uncertainty tend to be on the rise and provide a boost to buying gold by central banks. It should also be noted that US bonds could play the role of an alternative acquisition for central banks, given also the relatively better returns on the investment. Yet for the time being, we see gold being the preferred safe haven instrument of choice. Hence, should the buying spree of central banks for gold be maintained over the coming months or even intensify, we may see the increased demand pushing gold's price higher, maybe even to new record highs. On the flip side, should the yields of US bonds rise, we may see central banks diverting some of their investment in that area, thus weakening the demand for gold and weighing on the precious metals price. On a technical level, gold's price appears to have remained in a sideways motion just below the 2,355 resistance line over the past week. The sideways motion was underscored also by an RSI indicator running along the reading of 50, implying a rather indecisive market that may allow the sideways movement to continue. Hence, for the time being, we tend to maintain a bias for the range-bound motion to be maintained. Yet we have to note that the 100 moving averages and the 200 moving averages are still pointing upwards, implying the presence of a residue of bullishness among market participants. But for a bullish outlook, we would require the precious metals price to breach clearly the 2,355 resistance line, which has formed currently a ceiling for gold's price, and take aim of the 2,430 resistance level. On the flip side, should the bears take over, we may see gold's price relenting yesterday's gains and breaking the 2,290 support line, which held its ground against the downwards pressure in the first day of May. Should the S1 be broken, we note the former resistance line now turn to support at 2,220 level. Thank you for joining us today as we navigated through the dynamic world of financial news. From all of us here at IronFX, we wish you a solid trading.